Good morning, everyone, and welcome to today's webinar. My name is Alex Paul from InvestorStream, and I'll be your host today. This morning, we have Hydralyte North America CEO, Oliver Baker, who will discuss the company's progress since listing. Following the presentation, Oliver will be available to address the questions that you've all submitted. We've had a few come through over the course of the day, but if you have any more, feel free to send them through. There are a number of ways you can do that. You can email them to me at alex@investorstream.com.au. In the questions pane in the go-to webinar control panel, you can also do that as well. Finally, a copy of the webinar will also be available on Hydralyte's website and social media platforms later today. But for now, I'd like to throw it over to Ollie, who's going to kick things off for us. Ollie, the floor is yours.
Cool, thank you for that, and look, thanks for everyone attending today. It's we're delighted for you to take some interest in Hydralyte North America. The way today will work, I've got a few slides to kind of run through how we're tracking. Slightly misleading to say how we're going since IPO, because the reality is we're bound by the ASX to not talk about what's happening within the quarter, nor to provide any forecasts looking forward. So I can give you the best sense of how we're tracking, but any data we've got in here is largely from last year, but it's a really great indication for how we've started the year. While you could have submitted questions in advance through the portal here, there is a little control panel on the webinar, and feel free to punch in any other questions you have there, and I'll do my best to answer them. If I can't, I'll get back to you later on. But we, and then at the end, there'll be a bit of Q&A for anyone who's submitted things in advance. But I do hope that most of the stuff that you're interested in is covered in these slides. Certainly, we got a bunch of questions through ahead of time, and I've done my best to cover them here. So that's it. So look, let me just get straight into it, and we'll chat more at the end, so to speak. So quick reminder about who Hydralyte is. We're now part of an exploding rapid rehydration category, and the secret to us and other brands like us is that we have a low sugar, high electrolyte mix, and that mix in the right ratio, and it hits your body, it's able to be absorbed immediately into your bloodstream. And it's scientifically validated and so effective that it's universally endorsed by the medical profession. That's where Hydralyte was born. It was born in pharmacy to treat dehydration due to what we call clinical conditions: gastro, heat stroke, cold and flu, fever, all that kind of stuff, the unpleasant side of hydration, where it's really important to keep your fluids up to stay out of hospital. But the brand morphed into what we call lifestyle rehydration, which is things like sport, hangovers, travel, and other kind of daily health and wellness occasions where people are looking for an alternative to water or for sports drinks. So that's the space that we play in. We go after young families as a consumer. It's the consumer that relates most with our brand, and also allows us white space in what's a pretty crowded category in America, but largely dominated by sports brands. Quick sort of team update. This is the team that's behind the organization over here. I've been with the company about 3 or 4 years, but a lot of the major investors and team are from the Swiss Wellness Group. And then we have a bunch of American-based advisors and board members from consumer brands across e-commerce, but in the beverage space as well as baby. For those who are investors in Hydralyte, we're part of the IPO last year. I don't mean to bore you with the kind of backstory, but it is important to kind of make sure we illustrate the difference between what's happening with the Australian company and then what we're doing over here. The Australian business was sold in 2014, Australia and New Zealand. It was sold to a group called Prestige Brands, which is a large listed US listed like OTC holding company for a bunch of brands. Their subsidiary in Australia is called Care Pharmaceuticals. So Care Pharmaceuticals has the rights to the brand in Australia and New Zealand. After they sold, there was a tiny business in Vancouver happening then. The team that sold the business decided that they would maintain the rights to the rest of the world and go and activate the brand in North America. And so the company that we're talking about today is largely focused on North America. 99% of our revenue comes from US and Canada. It's split almost exactly 50-50 between the two markets. But we do, as a brand, hold the rights to Europe and to China as well as South America. Care Pharmaceutical pre-COVID actually purchased the rights to Africa and Middle East and Southeast Asia off us. So that went through at the back, when was it, 2020. So you'll see buried in the back of our annual report, there's some non-standard revenue, and that was them paying us for the fresh air to market the brand in those territories. So the company we're talking about at the moment is Hydralyte North America, focused in the US and Canada. So a bit about what we've done with the business the last couple of years. Amazon has been a kind of breakthrough customer for us. We've kind of got, triple the traffic visiting our site every day. We grew the business from well under $1 million to over $2 million between 2020 and 2021. We anticipate that Amazon will be, is our largest customer now, and will be far and away our largest customer by the end of this year. We grew subscriptions on Amazon, which is the stickiest kind of revenue there is, from literally zero, because we were ineligible for subscriptions. But once you hit scale and have consistency of inventory, Amazon allows you to be a subscription-based product. And now about 10% of our Amazon revenue is from subscribed customers. We took our store count across North America from 12 to 20,000 plus stores. We've added national distribution in Rite Aid, CVS, and have taken new SKUs into our Canadian retailers, where we have 28% share of the Canadian market. So we added 2 new products that went national with Shoppers Drug Mart last year, and already in the top 3 or 4 selling SKUs we have up there. And the business grew from 5 to 8 million, and it's in gross US factory sales from 2020 to 2021, and that trajectory is continuing through this year. The actual whole year-on-year comparison actually doesn't really illustrate the picture of where the business is at the moment. We hit a kind of a new normal in the back half of last year, and that's kind of the trajectory that we've continued on. So the way that we've done it is driving it through Amazon. The brand in Australia, which is that grayed out brand on the left-hand side, that's really what Hydralyte was in Australia, a very clinical looking brand. And while it's a household name in Australia, it's largely got no competition, and pharmacy is an incredible sort of healthy channel to sell products with health outcomes. That's not the case in America. If you're familiar with the US market, you walk into a pharmacy in America, and it's a hybrid convenience store, bottle shop with a pharmacy at the back. There's no pharmacist giving you advice. There's no one walking you around in the store to show you where you get to buy stuff. It's kind of every man for himself in there. So we undertook a major rebrand in 2018. We changed everything but the logo. So we reformulated, we developed natural products, we developed Amazon first products, increased pack size, low damage packaging that makes it much more suitable for e-com, and priced right so that you can afford the cost of single parcel freight. So that over that point of time, we were literally doing 18 months ago about 20 grand a month, and now we do about 250 grand a month. So the business has 10x'd on Amazon since I began in 2018, and as I mentioned, this kind of trajectory is continuing into this year. So that's driven a kind of underlined 45-degree trend upwards, certainly from an e-commerce point of view. This is our trailing e-commerce last 12 months sort of rolling revenue. So you can see that the increase between Q2 and Q4, 244% growth. Sorry, that's Q4 to Q4. 244% growth through e-com, and that's been the underlying trend in the entire business. So we grew e-commerce from about 1% of sales to 45% of sales in the last 2 years, and that remains the strategy of the company going forward. So to give you a bit of flavour about what's happening this year, and you may have seen the announcement about Shay Mitchell yesterday. This is actually an excerpt from a presentation I gave at Canadian retailers a few weeks ago to illustrate some planning for the year and how we were going to use Shay Mitchell. So first, we got a massive increase in marketing budget. The primary purpose of the IPO was to raise funds to increase marketing. We have wonderful distribution in Canada. As I mentioned, a 28% share. We're on every single pharmacy in the entire country. The top retailer there, Shoppers Drug Mart, which roughly represents about 35% of all pharmacy sales, so about the equivalent of Chemist Warehouse. They carry over 10 SKUs in every store in the country. So we have wonderful distribution there, and it's really about turning on the heat from a marketing and sales point of view to continue to drive sell-through. The addition of Shea Mitchell, which I'm going to cover a bit later in detail, is a big part of planning for this year. We've got a bunch of new SKUs coming out and continuing to develop stronger in-store presence. So this is an excerpt of that presentation that I gave for Shoppers Drug Mart. On the left-hand side is last year's sales by week. So that's 1 to 51 or 52, you can't see there, but weekly sales growing over the course of the year from 40 grand to 60 grand of weekly sales. But you can see the astronomical week in the middle. So that astronomical week where we grew sales from 60 to $140,000 over the space of about 3 or 4 weeks was a combination of kind of 3 or 4 different things. So we had a major marketing campaign in place last year driven by outdoor and digital. We then had a massive display up as well, and then there was a heat wave in Vancouver. So what that did is it sold the house down, but we ran out of stock for a number of weeks straight after. So what we've been able to do now, if we just jump back to this slide now, last year in 2021, we had 18 units in these displays. We now have 44 units in these displays. And this is a couple of $100 grand in revenue just in this one single customer when we ship this thing. So these are 1,000. There is 1,000 of these being made to ship in May that have gone from 18 to 44 units. So a pretty significant increase in inventory being taken by this retailer off the back of this planning around us doing this again next year, but more importantly, based on our investment in Shea Mitchell. So who the hell is Shea Mitchell? No one in Australia has probably heard of Shea Mitchell. So it's interesting the way that our journey to discovering her was actually a deep dive into the review of high-profile mums. Hydralyte's consumer is, or its majority of its consumers are young mums. We lean about 65-35 female to male in terms of the general split every day. And most of our consumption happens between the kind of 30 to 35-year-olds. That's our highest scaling demographic. The category goes younger than us. So we sit at the top end of the category and Shea kind of straddles both of them. So she's got a wonderful audience aligned to where both the category and our consumer is. She's a mum. She's now pregnant as well. But most importantly, she's a phenomenal builder of brands. She was a founder of Base and Onda. Base is a luggage brand that's built to 50 million plus in sales at the moment, of which she owns half the business. So she's already a kind of proven success when it comes to entrepreneurism, but particularly in this consumer brands of making things look great. So the other thing about her is she's perfectly aligned to our brand and consumption occasions across daily health and wellness, workout, travel. Hangover is a big part of it. Obviously, she's pregnant, so not much hangover promotion going on at the moment, but pregnancy is another key, key consumption occasion for people who are dehydrated. So as you would have seen, she gets a stake in the company, cash for her work, and commission on direct sales. And I'll talk to a little bit of the color about that. Now, so how do we end up with Shea? So I used to work, before I worked at Swiss, although we did a bunch of stuff with celebrities at Swiss, I worked for a sports marketing agency. We did a lot with major talent. One of the talent has many tangible and intangible benefits with selling. But traditionally, if you hire a high-profile athlete, actor, actress, paying them the money to do the work is just the beginning. You then need to go and do a big TV shoot, and then you need to pay a ton of money to get it actually on TV. And the cost of the media is normally sort of 80% of the whole spend. That paying the celebrities is truly just the beginning. The other thing is there's no direct selling. If it's an athlete in particular, their focus is on sport every day. Someone like Shea is actually engaged with their audience every day. It's a very, very different relationship with the consumer. The other thing with athletes, they're generally awful in front of camera. Most of my time, as I mentioned, pre-Swiss was with athletes across Formula One, AFL, ARU, And then at Swiss, a lot of high profile names, Nicole Kidman and Chris Hemsworth and people like that. The athletes are bad in front of camera, and so they're no good talking to their audience anyway, and they're very hard to get a kind of high impact message across on camera. So Shay, we know, does it every day. She also has an audience that she can activate for free. There's 32 million people tuning into her every day. So it's a hell of a big number. There's literally 1 in 10 Canadians are following her. So the cost for us to buy that audience is far outweighs the cost that we actually pay to get Shay, and she'll create most of the content for free on her phone. We're also able to measure the content. So as in we can measure the amount that she's driving directly through discount codes and other things like that. And we pay her a commission. We also pay her 5% of net sales to drive sales every time. And so that means she remains engaged. It means that she's getting a check from us every quarter to make, to show that it's real and tangible, and to keep her engaged throughout the term of the partnership. And it'll have the highest impact of her truly kind of selling with emotion to her audience. So, another kind of big backstory, in terms of her scale, we review the entire market here in terms of, I've literally been working on this for a year, in terms of high profile mums, to give you a sense of her followers, which are 32 million and counting. She literally grew 300,000 followers in the last 30 days. To give you a scale of what that means, the most famous influencers in Australia generally have less than 1 million. So if you look at, Nadia Bartel, who's obviously pretty famous in the last 6 months, I think she'd probably have about 900,000 followers. So Shay grew 1/3 of her audience in the last 30 days. She's 3 times as big as Tom Brady. She's 6 times the size of Patrick Mahomes, another kind of current quarterback who's a BioSteel, which is a competitor of ours athlete. Connor McDavid is the most famous Canadian hockey player I could find to put on this chart. But she literally blows athletes out of the water in terms of her scale and reach and her creative impact. If you then start looking at actresses and other mums, many, many, many times the followers of some of the most high profile actresses in the world. So Jessica Alba, who almost everyone on the phone would have heard of, has less than 20 million followers. So Shay has, literally more than 50% of the following of her. So we've done a lot of work on this partnership to lower the risk and do our best to maximize the output. Now, again, from a lot of my career working in this space, what generally can happen is that the influencer loses momentum and becomes difficult to work with. So the key to this is, one, all our payments are spread out over the course of the entire contract. The largest payment doesn't come for 2 years after her first post. So there's, if we're literally just talking about risk on cash and performance, she won't be paid a quarter of her salary, so to speak, until 2 years from her first post. But the main things that really drive the relationship, the way we go through it, is that she's doing minimum 10 social media posts per year. She gets paid off the commission of that. She's granted equity in the company, which it gives 2 things. One, she has passion behind feeling like an owner, and there's nothing like feeling like an owner to put your heart on the line. It also means that she is actually financially motivated to grow the entire company's impact. And that kind of comes across in 2 different ways. One, we actually can refer to her as an owner, investor, and partner, and that's very unique in anything I've ever done before in my career, that we actually have someone who's saying, I'm a part of this business and I believe in it. She'll also show up to 2 retailer meetings a year. Again, I've never seen that happen anywhere, except for ones where the famous person is the founder. So we have a bunch of retailer meetings that we have planned over the next 2 years, and there'll be a few that will be really high profile and instrumental to the outcome of the business, and Shay will show up. And as you can imagine, that sends the retailers wild. So there's more to meets the eye in sort of what this is. It's not your standard influencer arrangement. It's not just paid for posts. She's paid a commission on every post she makes. She's an owner of the company. She shows up to the meetings. she's here to grow it with us, and she truly will be a partner of the business. So I'm really excited about what this could be. You know, her collab SKU, which I don't think I've really touched on, which is the third last point. This will be a custom flavor that we are launching in the back half of this year. We might be able to bring it to market a little bit quicker, and there's a few things we're working on in the background to make that happen. In our category, remarkably, more flavors equals more sales. Every time we've launched a flavor, it doesn't cannibalize, it actually just complements. And we put it down to a few different things. One is just fatigue. You get sick of drinking orange all day if you're a heavy Hydralyte consumer. The other one is like family preference. Many of the people buying Hydralyte are buying it for a household. Some people like orange, some people like strawberry, some people like lemon lime. And the more flavor choice you give in a family, it encourages the whole family to kind of have their favorite flavor. So her collab SKU will be a kind of, the anchor of the partnership, but largely her impact will be seen across the entire business. And we imagine that while her SKU will be the best seller for the time that it launches and, call it the next year, there'll be an ongoing halo effect across the entire brand as we kind of lift the company together. And I think just on that flavor thing, one of the SKUs I mentioned last year at Shoppers Drug Mart, which is our largest Canadian retailer, we added a strawberry lemonade tablet. It went to #1 bestseller, equal as much as orange, which has had literally no cannibalization. They continue to grow and sell at the same rate every week. So more flavors means more sales at the moment. And we've only got 3 or 4 in each market, and we plan on bringing up to 8 for the back half of this year. So on to flavors, this is a bunch of stuff that we've got planned coming out. There's 4 new flavors that we're going to launch both in America and in Canada. I pushed up the variety packs then. Our variety packs are actually our #1 seller. I was talking to the point earlier about variety and people buying for their family. The fact that people can spread the risk across different flavors, but also have a bunch of different ones to choose from when they're drinking them regularly is really important. So we're going straight into variety packs of these new flavors right off the bat. And these will be here as soon as April, May. Also doing tubs. Tubs are coming out in Canada first as part of this kind of athletic focus range. The wonder of the tubs, there's a few different things that are really unique about tubs. One, less packaging. They're more sustainable. You don't have to rip, you don't have all these single serve sticks. They're lighter and easy to ship as a result. And you can also offer more value for consumers in price per serve because you don't have to pay for all the packaging. They're wonderful on e-commerce because they're easy to scale up. They're unbreakable. So there's a lot about these that are really uniquely positioned to make them great online. So we're launching 1 flavor, but I anticipate we'll be launching many, many more really soon. The next one is our US manufacturer. We're working on these new SKUs. These are larger sticks. So these are designed for a water bottle. The standard Hydralyte dose is a 200 ml dose. The category in America skews towards water bottles. So we are doing 16-ounce serves made for water bottles. We're talking American over here. So 16 ounces is roughly 480 mils, which is the standard water bottle size over here. And then there's a couple of new SKUs, again, that are coming out in our Hydralyte Plus range. This is one that is specifically targeting hangover. I can see a typo on the front of this, but this is an old packaging that I've used in a few presentations. And then ashwagandha, which is actually the fastest growing ingredient in anti-stress. So last 2 years in COVID, 2 biggest wellness categories that exploded, one immune, 2 stress and sleep. And ashwagandha was far and away the largest driver of that stress and sleep category growth. So this will be an anti-anxiety travel aid kind of SKU. And yeah, we're really excited. This has been taken by Rite Aid National Retail. So this is going into 2,000 stores from May this year, which is pretty exciting. Give you some context, Coles has about 800 stores. So pretty big distribution. So that's actually it. You know, we got a great finish to 2021, and 2022 is off to a flyer. We've got a ton of planning going into summer, a lot of innovation coming out. Our next quarterly is out on 30 April, and we'll be in Melbourne in the first week of May, Melbourne and Sydney first week of May, to continually sort of promote the business during that period. So that's it for slides. It looks like there's no questions in the control panel, but I'll take a little break and throw it back to the team in Australia to fire out any questions.
Thanks, Ollie. We have had a couple that have come through, so we'll just get them through to you shortly. I guess, firstly, thanks very much for the presentation. The first question that's come through, and you've mentioned, I think you might have touched on it in the webinar, but could you just revisit for us, when does the company expect Shay Mitchell to begin social media promotion, and will this coincide with the North American summer? Yes,
it'll start in May for her. Her baby's due in May, and we want to leverage the fact that she's pregnant, and that Hydralyte's trusted for pregnancy. So first posts are planned for May. Her pregnancy has actually thrown a lot of the planning kind of out the window to a certain extent. She only announced her pregnancy about 6 weeks ago. So we've had to kind of change the way we were doing things to make the most of that, but we're actually delighted that it's happened because it's an incredibly powerful consumer message to see a high-profile pregnant celebrity taking a product like Hydralyte in, you know, the month before they're about to give birth.
Yeah, you mentioned this in the webinar quite extensively, but I think we've had a number of questions that have addressed it, so it might be worth revisiting it again. Why did the company choose someone like Shay Mitchell opposed to a prominent US pro athlete or sports team to act as a brand ambassador?
Yeah, look, I'm going to go back to the slides here. Well, I mean, literally, there's not many US athletes that actually have that much impact. And athletes are just awful sellers of product. Generally, they're pretty good at selling clothes for athletic performance and some supplements, but generally they're really poor in front of camera. They're extremely time poor in terms of their ability to kind of show up and do anything. And yeah, they're generally just not engaging with their audience in that way. So the thing about Shay is she's a mum, you know, she also speaks the language of her audience. And I think it's really important to think about this. These are the key times that people take Hydralyte: workouts, morning pick-me-ups, when you're sick, when you're hungover. And I've got a little pregnancy icon over the top of this because Shay owns a tequila brand, yeah? So hangover is a big part of, you know, what she's dealing with every day if she's promoting tequila on her feed all the time, and then travel. Athletes can't promote any of this except exercise. So it's a very important kind of nuance with the way that Hydralyte is consumed, is that it's not just a workout product. And if you pair yourself with an athlete, that's what it becomes synonymous with. Whereas a busy working professional, like, you know, like everyone on this phone, who are, you know, doing their best to go to the gym or go to yoga, juggling kids and family, traveling, going out on Friday nights with their mates, you know, getting hungover, that they're actually living this life. And so this life of Shay is like the working professional life, you know, on steroids. And that's a lot about why we pick her, well, her particularly, but certainly her or another mum over all athletes or sports teams.
So you mentioned Shay's audience, 32 million followers across a number of different platforms. How does the company monitor that audience to ensure that the audience is actually real and not bots, and B, that the product is cutting through?
Yeah, look, good question. There's a bunch of software that'll tell you whether the audience is fake. It's also in the contract, believe it or not. She has to swear that it's not fake. It's actually part of the details in the small print at the back, but there is tons of software that does its best to estimate it. So before we ended up to contract, we look at that software, and you can tell who's you know, who's real and who's not. Generally, it comes down to a lot of engagement as in how many likes and comments, as opposed to how many followers. So that's kind of how you validate it. And what was the other one? How do you cut through to that audience? Well, you cut through storytelling. So what we've noticed, and this is again one reason why we've done a longer, deeper, collab product relationship with Shay, is that other influencers, it does become quite transactional. And let's say you pay someone, they've got a lot of followers, you pay them 10 grand to post something, they post and then they're done. And that impact of the post, irrespective if they get a commission off it or not, if it's not done with education, understanding, passion, creativity, and then repetition, it doesn't work that well. And look, you can sometimes get lucky and, someone just produces a kick-ass piece of content that their audience really resonates with. And that we do have, we have a bunch of micro influencers doing that for us every single day. But a lot of it just, you need to build the relationship with your audience, just like, the old school TV ad. You got to show it to people 20 times before they even remember what you were talking about. So the idea is that Shay is continually having that conversation with her audience. She's able to answer questions, she's able to talk to them. And also the development of her SKU gives her a story to tell. So she wants to go to the factory. She wants to show us tasting the samples. She wants to kind of show the artwork getting created as we make the packaging. She wants to show it getting boxed up at the factory when it's kind of coming in. So she is, and that's what she's done so well with Base. She builds that kind of crescendo. And so what we hope and what we plan for with this partnership is that that story has been told to her audience over and over and over again in the lead up to the dropping of the SKU. And then 5, 4, 3, 2, 1, it drops, and the idea is that we sell a lot on that day.
So you mentioned Shay's obviously very, very busy. She's got a lot of other investments going on at the moment, as well as you say, being pregnant. How do you ensure that this isn't a distraction from her other investments or interests?
Well, we would love it to be a distraction from her other. I think it's probably how do we make sure that she gives us enough attention amongst everything else she's got going on. I think, and I've touched on all these little unique things. The commission off posts matters because she gets paid that. The development of her own SKU. At the end of the day, it's got her name on it. And there's nothing like putting your name on a product to make you, feel passionate about the outcome. So developing that SKU with her, building that relationship with her, working on the artwork with her, working on the marketing planning with her, the messaging, the colors, all that kind of stuff will happen on the way through. And so truly the idea of this partnership is that we take an outsized proportion of her time and energy and focus into making this work as hard as we can together. And then, what's exciting for her and for us is, if it's phenomenally successful, the hope is it has a big impact on share price, and then she's rewarded and we're rewarded and all our investors are rewarded.
Now, is the Hydralyte flavour being developed for Shay Mitchell part of the 5 new products that the company has said it would introduce this half? And if not, can you just update us on the status of these new products?
Yeah, look, there's a bunch of stuff going on in the background. We have all of these coming out now, as well as these larger pack sizes. So we're working in the current innovation pipeline. We sort of agreed with Shay's team that we'd really dig into it once we signed. So we are meeting literally next Friday to sit down and to map out that plan with the flavor. And I can't give you the exact plan on it because it needs Shay's feedback. She's going to have, she's going to pick her own flavor because we want her to like it. We want her family to like it. And so we're wrangling samples. We're getting a bunch of things to her, and it might be that it's a derivative of what you can see on the page here, or something all new altogether. So that's something that, we don't know yet is the reality, but we anticipate that we can use some of the things that we're already working on to make it come to market faster.
Ollie, you mentioned that obviously Shay's obviously a big name in the US, not so much in Australia, and you touched on, I guess, her follower base compared to more prominent Australian influencers.
Yeah.
How much of a consideration was that for you to sort of cut through the Australian market? And do you have any potential idea of how Shay will cut through in Australia compared to, say, any Australian influencers?
Yeah. The good thing about Shay is she won't have a big impact on the Australian business, because the Australian business operates independently of us. And while we cheer from the sidelines for them, we're interested in driving our business. And Shay, Shay has a minuscule following in Australia relative to the US and Canada, and actually the UK as well, where we have a distributor. And so, I mean, yeah, look, for colour and context, the most famous influencers in Australia have 1 million followers, roughly. Shay has over 30. So we're talking 30 to 40 times as big as Australia's biggest influencers. And, the fact that no one's kind of heard her in Australia is actually not relevant. I hate to say it's relevant to explain it, which is why I do this chart, which is to illustrate just how much bigger she really is. And look, I was not familiar with Shay when I was introduced to her, but the more that we worked on the details of the partnership, I literally worked through 12 different celebrity mums over the course of the last 6-9 months. And, the choice of her, just completely outweighed everyone we looked at. Well, an incredible person and impact and desire for the partnership. You got to remember, you can't just go to the celebrity shop and buy a celebrity. They actually got to want you as much as you want them. They're paid pretty well in their day jobs.
Now, the package that Shay is receiving seems very generous. Now, marketing in this area works well in Asia, but may have passed its use-by date in the Western world. Are there controls in place to ensure payment on success? Can the shares be clawed back on non-performance? And what would you deem the positive outcomes from this kind of initiative?
Yeah, look, I think the Asia thing, yeah, it's interesting. I don't necessarily agree with that. I think the reality is, in America, there is a never-ending stream of examples of celebrity-owned consumer brands doing exceptionally well. And there's no shortage of them turning into, $100 billion, $100 million and above into $1 billion brands. Like, anyone that's coming to mind right now is like George Clooney's tequila, but you've got the Honest Company from Jessica Alba. You've got a bunch of brands connected to celebrities that have done exceptionally well. What we've found hasn't worked is one-off transactions with high-profile influencers. They're actually where we find that we get a bunch of traffic, the traffic's not engaged, they don't understand the brand, they hit the website, they don't convert. And we realized that in order to really maximize working over an audience, is that we need Shay telling a credible story, we need us advertising to that audience with our own advertising, we need sort of outside soft stories happening through PR with appearances, and then we want just hardcore passion in selling. And the hardcore passion in selling comes in two ways: in the commission paid on posts, and then the collab co-branded SKU. As for the shares aren't clawed back. The shares are a portion of her remuneration, of which is majority cash, and the cash is spread out over 2 years to ensure that, if things don't go wrong, is that our risk is reduced. And so in the scheme of things, Shay is cheap for price per follower and price to produce content. She's literally a bargain, I would say, compared to who we've looked at this scale. There's a lot of intangible benefits as well with someone like Shay. And look, we saw this a lot at Swiss. So great example with Swiss. First time we came to America, we presented the brand. We were like, oh, we're growing at, extreme numbers. We're dominating Australia. We've grown the category. we're doing all this amazing stuff, and everyone would nod their heads and then not talk to us. Then we decided that we would put Nicole Kidman in the presentation, and all of a sudden we were invited to every retailer in the country to present the vision for their retail, and we got on shelf in every pharmacy and mass merchandiser in the country within the space of 18 months. So there's a kind of intangible cut through you get with someone of this scale, because the buyers are presented a bunch of different brands from doing the same thing every day, particularly like a category like ours now, where there's bigger hydration companies there's bigger hydration companies than us here, and there's new ones coming in. So this allows us that kind of credibility, that cut through, that ability to get meetings that we couldn't get before, as well as the tangible stuff that we can see on the slide here to make sure that we're getting the most of it. So look, at the end of the day, it's a bet. We are confident we've done everything to reduce the risk of this bet. People have got to work with us as much as we want to work with them, and the way we've reduced as much risk as possible is in all the terms of the contract, and then spreading the remuneration out for as long as possible, with most of the chunks of it coming at the back end.
Thanks, Ollie. Now we're going to move off shade to some other aspects of the business now. How does adding a different flavour affect manufacturing capacity? I assume there's a maximum manufacturing capacity that you'd say doesn't cannibalise, but wouldn't a new flavour mean moving some manufacturing power from other flavours?
Kind of, but at the end of the day, producing a batch of something only takes a couple of days. So it's more so in the planning. You plan it, you prototype it, you get the flavor, you like the flavor, you order all the raw materials into the facility, you then have a production day, all those things come together, you make the thing, it then clears quality, and out the door it comes and lands in our shipping facility. So that process happens with every single SKU, and you're largely just multiplying the same process on top of what's already happening. So it's not like there's a tablet factory that's running every day of the year, and if you put another flavor in, it's got to stop for a month, stop the orange and start us. Truly, you could manufacture all our product across all our manufacturers that we have in our warehouse now, if it was planned, in under a month. So it's largely just a scheduling thing. And look, right now, I reckon, I just looked at it before you, I reckon I got 50 purchase orders for different flavors, different formats, for different markets, different packaging. So literally this is adding 51. It's truly no big deal.
Ollie, could you just clarify something for us? You mentioned on slide 5, 8,000 to 15,000 per day in online sales. Is that every day or every business day?
Every day. Every day.
Okay.
Sunday's our biggest day. Sundays
right, okay.
we did 12 grand just on Amazon alone. So we, it fluctuates a bit, but that's generally what we do.
So how have recently launched products been performing in Canada and the US? And does the company usually witness a spike in sales when a new SKU is introduced?
Yes, less a spike, more a kind of an embrace and a complement to what's happening. So good example, Shoppers Drug Mart. Yeah, when I first started, we only had 2 tablets on shelf. We said, hey, we want to add a new flavor. We got 10 in Australia. They all sell really well. They're like, it's going to cannibalize sales. We convinced them to put it on shelf for a range of different things. Of course, we thought there was a risk of cannibalization, and literally it just added. I wish I had a chart to show you. The moment it added, it just started selling as much as all the other ones. And that's the same thing that's happened in the example I already gave, but I'll give that same example with Shoppers Drug Mart, national retailer in Canada, similar market share to Chemist Warehouse. We launched a strawberry tablet there only 3 or 4 months ago, and it's now the #1 seller. There's 10 grand a week. So of that 140,000 you guys saw on the page, a few pages prior, what we did in peak summer, that single SKU now is doing 10 grand a week in sort of low season. So that's a great example of more flavors just complementing what's already happening on shelf. Same on Amazon in America. More flavors have largely just layered on more sales.
Ollie, can you outline the competitive landscape for us investors? Aside from influencer marketing initiatives, what's the company doing to stand out in a potentially saturated market?
Yeah, definitely not saturated because this category is growing at like 100%. So if you think about the kind of category that creates, when we did the IPO, the category was worth about $1 billion. It's now worth about 1.5 billion in the last 6 months. So the category is exploding. So saturation is not even close to where we're at. We have a different business in Canada and America. So Canada is 28% market share, number 2 brand, distributed in every pharmacy in the country, grossly undersized as a category. So all these marketing initiatives, Shay and everything else, we're layering on a dominant position to grow the category. In America, there is a lot of brands. Pedialyte is the incumbent sort of a clinical brand designed for kids, sold in pharmacy, primarily in ready-to-drink liquids. That's the brand here. So I don't know if you guys should be able to see that, but these, because our bottles are different in America, we have these square style bottles. But you can see us sitting side by side with Pedialyte. So Pedialyte's the market leader in stores, and then Liquid IV is the market leader online. Liquid IV sells the powder sticks. So in terms of how we stand out, we did a truckload of consumer and just category analysis. One, a couple of years ago when we rebranded and went after Amazon and 10x the business, but also leading into the IPO, because of the IPO, we had to write a prospectus that looked at the industry and then looked at our business and how we were kind of attacking the category here. And the great thing about that IPO process is it validated exactly what we're doing. The market leader in stores is Pedialyte, but dominated in ready-to-drink liquids, has a really poor online strategy and is not the focus of the business. Pedialyte's owned by Abbott Labs. You know, Abbott famously making baby formula, drugs, COVID tests. You know, Pedialyte's not top of the tree for them. Liquid IV, on the other hand, went after the under 30s market in that sort of lifestyle space, and you know, and they crushed it off the back of that. So we sit at the intersection of the two brands, and it's kind of interesting to see them on shelf here because we sit next to Pedialyte and next to Liquid IV, but in different parts of the store and in different formats. So Liquid IV being a stick style format, and next to Pedialyte being a liquid style format. So that's where we have our positioning. But importantly, it's about us going after millennial moms. That's where we have most of our sales. There's not a brand specifically talking to that age group. And so at the moment, that's how we really kind of go after what we're doing. And when I go after the consumer over here, so when I'm talking to retailers here, I truly say we're a healthy all ages Pedialyte, and people get that as the kind of one-liner for who we're attacking.
We only got a couple more questions, Ollie, and then we'll wrap it up. So, the obligatory COVID-19 question: does COVID-19 continue to have an impact on bricks and mortar retail stores across the US and Canada? And do you expect online sales to continue to trend strongly?
Yes, COVID-19 has had a final bullet in the heart of health and wellness in stores in America. But you're putting a bullet in, $50 billion, which is the total health and wellness industry here. So it needs a lot of bullets to kind of slow it down. But the reality is a third of health and wellness goes through online in America. And so that's where innovation goes. And that trend is accelerating. Canada stores were really had a massive impact from COVID due to massive lockdowns, exactly like Australia. Canada played the kind of Australia card with extreme lockdowns in 2020, but had much faster rollout of vaccinations last year, so able to open up much quicker. So we've seen Canada bounce back in a massive way, but stores aren't really our focus in America. So when you're looking at our sales, and I say 45% of them are coming from online, the vast majority of that is Amazon. And then the other 55%, 80% of that is Canada. And so, like I mentioned, we have a very different business. We have an online dominated business in America that's performing, really, really well and led by Amazon. And then the Canadian business, which is, truly what I'd call omni-channel, because we're in every store in the country and we're a leading brand on Amazon there as well. So look, COVID's affected supply chains, and that's been going on now for 2 years. So one of the benefits of the IPO and having the cash in the bank for that is we've been lucky enough to invest more heavily in stock, so that when we see massive sales spikes, we're able to kind of move quickly and already have the inventory in our warehouse.
You mentioned that COVID-19 has impacted supply chain over the last couple of years, but have you witnessed any supply chain issues in recent months?
We have supply chain issues every day, and that's the same as everyone. So we are in a kind of level playing field, but like I said, we've been dealing with it for 2 years, and so it's one of the eroders of gross margin, is that when we're growing really fast, we need product really quickly, we have to air freight it, and we've got to pay big money for air freight. So that's the one thing that's really we've suffered from last year. That obviously won't go on forever. But the main thing we're doing is moving the majority of our American manufacturing to America, and that'll allow us to move quicker, scale faster, all that kind of thing. So you're probably asking, why the hell didn't we have it in America in the first place? And it's a good question, but we were able to benefit from the cost of goods that the Australian team had when the partnership first started here, when the business in Australia was sold and we opened up in America, and we were able to maintain our cost of goods on tablets and powders and all the stuff that we were making in Europe back then. So we actually have great pricing in Europe. It's just the supply chain now that's unworkable, and that's why we're kind of moving to a dual supply situation where all our American products will be made here in the States.
And last question, Ollie, and it'll be the last one we deal with for the webinar, and there's also the last question we're going to deal with on Shay as well. So is Shay more of a Canadian marketing piece, or will she cross-pollinate into the US?
Sorry, keep going.
Well, because I guess, are you looking to do something similar with a US high-profile marketer to hit that market, or is Shay going to basically cross-pollinate the
Shay's there to do
North America?
both. The win is she's Canadian, yeah? At the end of the day, 10 times more of her following's in America. So we're going to talk to 10 times more Americans. It's just great that she's Canadian, because she'll have an outsized kind of voice in Canada that matters. She flies back to Vancouver on her own. She's going to walk into a pharmacy in Canada on her own. So she, imagine our business was only America and Australia, and we'd signed a massive influencer that lived in America but was from Australia. And then imagine she comes back to Australia, the impact that she can have just being from Australia. So, but at the end of the day, the audience and the volume and all that and the opportunity is here in the States. So it's one of the many things that was the tick for Shay Mitchell over other influencers, was that she just happened to be Canadian, and it allows us to really maximize that with the business that we have up there, as well as greater cut through in the States.
Fantastic, Ollie. Well, look, that's all the time we have today. I'd like to thank you all for joining us today. I'd also like to thank Oliver for presenting and taking the time to answer some questions. Now, as I mentioned before, a recording of the webinar will be on Hydralyte's website and social media platforms later today. Ollie, before I let you go, do you have any final comments to leave with us today?
No, I don't. Look, I'm just delighted with the turnout, and that everyone's interested in the business and keen to see how we're doing. So look, we thank you for showing up and paying attention, and we'll release our next quarterly at the end of April, which we're pretty optimistic about and excited to kind of come down and show everyone the next step in the journey and further progress with how we're going with Shay, because there's a lot going on, and we're delighted with the way things are progressing since IPO. We're certainly ahead of all the expectations of where we hoped we'd be. So thank you again for tuning in.
Fantastic. That wraps it up for us here. Thanks, everyone. Have a great day.